Man, these high car payments and this negative equity is getting out of control, guys. Let's talk about it.
Grace, what's the highest payment you've ever seen?
$17.84.
Demetrius, what's the highest payment you've ever seen?
Oh, $2,100.
Golly.
Roy, what's the highest car payment you've ever seen?
It don't stop, man. It don't stop.
It was $1,958.
Jeez.
Car payments have reached record highs in recent years, and Americans are feeling the pinch. The average payment on a new vehicle rose 40% between April 2019 and April 2024.
Great.
Hey, Paige. What's your car payment?
$650.
Okay. What is your car payment?
Mine?
Mm-hmm.
$640.
Okay, thank you. Hey, Kayla. What do you drive?
A 2500 mega cab coming.
What is your car payment?
$750.
Okay, so her payment's $750. Why does she need a big old truck like that, man? $2,500? That's crazy.
Some people will look at this and they will say, are you kidding me? I mean, that's basically a house payment for a lot of people.
You know, we always had this idea that a new vehicle was something that was attainable for every American. Well, clearly we've moved away from that premise.
Blame it on high interest rates and high vehicle prices caused by pandemic-era shortages.
I drive a Jeep Grand Cherokee Laredo, and my car payment is $500 a month.
That's not bad.
What is your car payment, Mike?
$850.
And what do you drive?
Grand Cherokee L Overland.
Okay.
Bruh, $850 for a Grand Cherokee? Man, that's Escalade money, man. Ain't no way, Slim. That just seemed outrageous to me. Ain't no way I'm paying $850 for no Cherokee. Ain't no way.
What kind of car do you drive?
Grand Cherokee.
And what is your car payment?
$650.
See what I'm saying? That's reasonable.
What kind of car do you drive?
Wrangler, $392.
And what is your car payment?
$1,000 a month.
Thank you.
Vehicles were growing more expensive prior to the pandemic, as automakers shifted away from pumping out cars for the mainstream toward a strategy of selling fewer, pricier vehicles that...
Now, see, that's what's really happening, guys. If you think about it, you can't even really buy a base model vehicle right now. Everything is top. You got to get the top of the line. When you get the top of the line, that automatically means you're going to pay more. Because back in the day, if you guys remember, you can buy the lower trim. It might not come with, you know, the best rims on it. Might not have leather seats. But now what they're trying to do, every vehicle, top of the line vehicle. So it's going to automatically cost more, which means your payment's going to be high. That's why everybody got $1,000 payments. It's crazy, man. They're setting us up.
Pulled in more profits. Many in the industry say that might be here to stay, meaning a lot of ordinary Americans will be locked out. Here are a few numbers that illustrate how tough it has become. Just 10 years ago, car payments were nearly half of what they are today. The average is $760 a month right now, but quite a few customers pay more than that. A near record number are paying over $1,000 a month and have been for 4 straight quarters.
The idea of you're going to pay, $700, $800 a month for the next 6 years. I mean, it's just, it just sounds crazy for a depreciating asset.
It is almost like borderline disturbing how acclimated everyone has gotten to the idea that, you know what? I've got 700, I've got 1,000, I've got...
And that's very true, guys. A lot of people, they just believe they're paying $700 a month for a Nissan Altima. It's normal. And it's not, man. That's a $300 a month bag on a car, man. Ain't no way I'd be paying that much for them cars.
All these dollar figures that other people will say, hey, that's my rent. Hey, that's my mortgage from 10 years ago.
So payments are high, and it's not just because of inflation. Car payments rose twice as much as overall inflation from 2019 to 2024. 2 things drove this: high prices and high interest rates. High prices hit the used vehicle market first, where dealers can pretty much charge whatever they can get for a car. But soon they made their way into the new car market, which was hit by a severe shortage of new vehicles and parts. As manufacturing shut down around the world during the COVID pandemic, shortages popped up everywhere. First of cars in 2020, then of parts like semiconductors in 2021 and 2022. With supply so tight and demand...
Now, I don't completely agree with that. I think the dealerships and the manufacturers were milking that whole thing. The whole chip shortage thing. They saw that they can charge these outrageous prices for these cars, so they used that chip shortage to overcharge us, man. And a lot of people fell for paying markups and everything.
And so high, dealers and automakers didn't need to offer any incentives. Charging at or above MSRP was common.
Yep.
Anyone who bought a car pretty much at any point in the last 4 years paid historically high prices.
Those same expensive vehicles, though, live in the segments that today are experiencing the greatest amount of depreciation. So you might have somebody who really scored 2 years ago. They went to a dealership, they got a fantastic vehicle, good price, but now they've come back and they didn't realize that the rest of the market has evolved.
And then, of course, there are interest rates.
Yep.
Anyone shopping for a new car is going to get a fair amount of sticker shock when they see the price of the car along with that higher interest rate.
Today, auto loan rates are just above 7%. In March 2022, before the Fed started raising rates, they were closer to 4%.
Yeah.
An alarming trend has taken root within a segment of borrowers. Those who decide to get a new car when the one they're driving is worth less than the money they owe on it. Something called negative equity.
Yep.
The average amount on those trade-ins hit an all-time high in the first quarter of 2024.
Wow.
Almost 25% of purchases were made by customers with negative equity, nearly 10% more than just a couple years earlier. Rolling that negative equity into a new loan comes with bigger payments at higher interest rates over longer terms.
What's the most negative equity you've seen on a deal?
I would say like 15,000.
Golly.
What's the most negative equity you've seen on a deal?
Hell no. Still made it happen though.
What's the most negative equity you've seen on a deal?
I've seen 22,000 negative on a deal. Hey, we'll work with you.
Hey Jack, what's the most negative equity you've seen on a deal?
I'll be like around 25.
Golly.
1,000? Of course.
What's the most negative equity you've seen on a deal?
50K.
What?
50K negative. Audi, man.
What's the most negative equity you've seen on a deal?
30 grand? 40?
Wow.
But I overheard the other day that there was someone that had like
85.
Yeah, like a lot.
You got them, though.
They
Come
had
see
a
us.
payoff of
That's
like
crazy.
almost 9,000 on an Audi.
Wow.
That's
Scary.
crazy.
And trade-ins in
Now, see, you heard what they said, guys. They'll work with you. What they mean by work with you? All they're going to do is roll that over to the next car or require you to put a whole bunch of money down. See, these dealers don't care, guys, so we got to be on point as the consumers.
involving negative equity have only gotten more expensive over time.
What makes it worse, though, is you probably got a decent loan 2 or 3 years ago, right? So if you do have negative equity and you roll into the next payment, it's not like you're even getting more favorable terms. Like, unless you get a subvented APR from the automaker, you're really compounding this problem. Because again, at 7-8%, that first month payment, that first year's payments, a lot of that's interest. You're not going to dig yourself out of this hole.
And finally, consumers want fancier cars, and car makers have capitalized on that. Just a decade ago, the average transaction price was $32,386, which was itself a record high. As of April 2024, average transaction prices were $48,510. Sticker prices are still rising, as are the prices dealers are paying automakers. Vehicles themselves are not getting cheaper. These forces combined lead some in the auto industry to wonder whether volumes will remain lower for the foreseeable future as the market continues to shift towards serving upscale customers and charging upscale prices.
Why do I spend my money on depreciating assets like cars? Because the investment isn't in the car itself. It's in the feeling you get hearing that supercharger
What the
whine.
heck you driving?
How it makes you pumped up before you go into work to crush it.
And see, a lot of people have this attitude, and I kind of get it, man. You know, you only live once, and some people feel like, man, I'm going to get stuff while I can get it, because you just never know. We're not promised tomorrow, but guys, we also have to be smart. We got to be realistic when it comes down to these cars, because as you can see, these dealers don't care. They do not care. They don't care if you got 50,000 negative equity. They will roll it on to the next car and keep on rolling. Before you know it, you paying $100,000 for a $20,000 car. So, like I say, I'm not the one to judge people, but as you can see, a lot of people do not mind having real high car payments, and that's why I'm able to bring you guys these repo videos, because a lot of people realize once that $1,000 hit once, then you got to pay it again, and by that third time, it ain't as fun as it was before. Leave your comments, guys. Let me know what y'all think, man. I appreciate y'all watching. I'm going to keep these videos coming. I'll see y'all on the next one. Peace.